Here we have today's activity on the pound dollar. This is the 4-hour chart. We were in a trade going short, which was based on this area here. Trade was stopped out for 62 pips. The stop loss was up here at the top where the semaphore is located. This was the entry here where this arrow is. 62 pips roughly. We're now waiting for confirmation of trend direction. Currently, based on this information down here, as you can see, the pound dollar on the daily chart is currently 2 pips above 13 EMA, which indicates a long trend direction. However, based on my method, the filters, which are these arrows that you see on the chart, these round arrows, the filter has to be in the same direction as the daily trend. So currently that's not the case. So on this 4-hour chart, these 4-hour filters are pointed down, meaning that we're anticipating a short trade. So this actually could potentially set up to go short again, and if it did, I would take this trade with the same parameters that I would normally use within the EA, just to give you an idea of the way that the trade sets up. Back in this area here, I'm going to just move this box over. Back in this area here, this was an actual trade that I took. This short setup based on the fact that this filter was short and the daily trend direction was short at the time of this entry. Stop loss is where this pink line is. From the entry, it was roughly, we'll say around 42 pips, including the spread. Moved down very nicely. If you go back even further, you can see that there was another short trade that preceded this one with the same exact setup, the same conditions, and the same confirmation for entry. Now, with the method that I use, the requirement is that the daily direction has to be predefined. So currently, with the daily being long, as I mentioned, the filters have to line up and be in agreement with that daily direction. If that's not the case, then we are simply waiting for them to either agree, or we're waiting for the daily to go short again. And it looks as if the daily is potentially going to go short again, and perhaps give us another trade going down. And as I mentioned, if that's the case, then I will take that trade going short again. In addition to the 4-hour chart, I also have a filter that I use on the 1-hour chart with the same requirement. That would be these arrows here. Here you can see that there are larger arrows and then smaller arrows. The larger arrows indicate that the daily is pointed in that direction. So as we just saw a moment ago on the 4-hour chart, we also had large and small arrows. This is an indication that the filter is short as a result of the daily being short. Now that we're above on the daily, this is still the actual filter that is currently in that's in effect for any potential setup that will take place. So what that means is that based on the filters that I'm using on the 1-hour and on the 4-hour, we would be anticipating the short to come back when the daily dipped back below the 13 EMA. Now, the 1-hour time frame is not actually used unless we have a fresh daily direction. So the reason that I came down to show the 1 hour is so that you can see that with the daily being above, if the daily direction holds and we do not get a setup coming back going short, what I would need to see prior to entering a long trade is for there to be an arrow pointing up. So I would need to have an arrow pointing up at some point. So what that basically would mean is that we would have to have a retracement that comes down to give us this up arrow, to indicate that the price is now being filtered into the bottleneck, because that's what this is. This filter is squeezing the price action alongside the existing trend from the daily direction to give us the best potential entry into the trade. So when those conditions are present in the market, where we have this up arrow and the daily is still long, even if the daily does, temporarily dip below. So in other words, if we were to come back down, perhaps get into a short trade going down, and that trade didn't go anywhere, or we'll just assume that it set up, did whatever it did, and then that trade is over with. If this filter comes in long, when the daily comes back up above, and we now have agreement with the 1 hour filter in the direction of that daily being above, then we would have an opportunity to take the long trade when all of the conditions are present. So the conditions are the 1 hour and the 4 hour and the daily all being above or below the 13 EMA on their actual time frame. So you need to have the 13 in agreement on the 1 hour, the 4 hour, and the daily, and this filter has to be pointed in the same direction. This 1 hour filter. That's for when you have a setup in a new, fresh daily direction, which is the case for today, because we got this alert going long on the pound dollar. We also got it going long on the euro dollar, and we could take a look at the euro dollar briefly, just to have an idea of what we're waiting for there. We also had a short setup on the euro today, which failed. This trade was also stopped out. I believe it was 102 pips. However, we've had multiple trades coming down during this this daily trend going short. I don't know who that is calling me, but I'm not answering the phone at the moment. Okay, this is the 4 hour euro dollar. As I mentioned, there have been multiple short opportunities. These are just some of the performances of these trades. The actual entries are where you see these arrows, these pink arrows. We had one there, we had one here, we had one here. These were all successful, profitable trades. These were the results of the trades based on the default settings of my expert advisor. 105 pips here back on the 22nd. Well, this trade actually started from the 21st. It ultimately led to a profit of 105 pips without intervention. This was just the EA managing the trade and entering the trade from start to finish. Same situation here. This was a profit of 188 pips. And this last one here was a profit of 75 pips, and the stop out today was for negative 102 pips. So you can, have an idea of how profitable that the method is, in spite of times where we do get stopped out, which is usually only when the daily is transitioning, which was the case today. So, this method depends and thrives off of continuation moves that will be reflected from the daily chart, and that's why the daily is required my filters allow me to enter into the trade at the best and the opportune time to get into the move just at the right time, so that the continuation is right at the beginning and it's a fresh entry. We can even go back a little further to see some of the other entries that there have been and what their results were. These trades here resulted in break even, so I didn't identify that they were break even trades, but you can see that they were not stopped out. The stops are always up wherever you see these round semaphore balls, either 3, 2, or 1 balls. That's the way that the indicator reflects highs and lows. This entry here going short, this pink line here was the stop loss level. I didn't identify it over here for whatever reason. I probably didn't. I just skipped it at the time. But the stop was somewhere up in that area there. The beauty of this method is that I apologize for that interruption. That was my son, a 4-year-old, walking in during the middle of my presentation. But anyway, yeah, so these trades in this area here had resulted in break-evens. As I mentioned, my expert advisor manages the trade from start to finish, so just as an example, this trade here had a stop loss roughly of about, we'll say, 80 pips. It went for as much as 91 minus the spread, so we'll say it went for as much as 90 pips on this move in this area here. The expert advisor moves up the stop loss at predetermined levels based on the percentage of the target that has been achieved. So it calculates not only the lot size, not only the stop loss level, but it also calculates the target based on the size of the stop loss, and it moves up the stop loss based on the percentage of the target that has been achieved so far. And it's a scale. There are, I believe, 6 or so times that it will move up the stop loss as the trade progresses. So it's very intricate. It's based on just my own personal experience of the market and the way that it moves. Once it reaches certain levels of pips of movement. So oftentimes it will maximize whatever the move is in the market at the time. So in this area we got very choppy. As I mentioned, this move here was this move here was worth about 90 pips to this low here. It ultimately led to being a break-even trade, I believe, because the target was much larger. Just to give you an example, if the stop loss level is 80 pips, it's going to target at least a 1 to 2, I believe. So if it's 80 pips, that means that it's targeting 160 pips, and it won't start to move the stop loss until it reaches 75% of that target. So if it's targeting 160, 75% of that is the first time that the stop loss will move. Well, actually not the very first time, but it's the first time that the scale will move up the stop loss to lock in a larger number of pips. The initial movement is based on 50 pips, and that's when the stop loss is moved to break even. So this video is about to cut off, but I just wanted to mention that this is just on the euro dollar pair, and this is recent performance dating back from November 1st, which is right around the time that we had the beginning of this daily trend on the euro dollar. Stay tuned for more videos.